Okay, so balance sheet or statement of financial position, all right, is always talk about asset, liabilities, and owner's equity. The other one is what we call income statement. Income statement, or sometimes we call it as a statement of comprehensive income, SOCI. Okay, so when I say SOCI or income statement, I'm actually looking at your revenue and your expenditure. And from here, I can decide how much is my profit. Okay, so first is your balance sheet, second is your income statement. So what you get from your balance sheet? Your balance sheet must always show that your asset equals to liabilities plus owner's equity. Okay, so whenever you have balance sheet, you must always make sure that your asset must always equals to your liability and owner's equity. When your income statement, you show your revenue and you also show your expenses. So then you compare between your revenue and your expenses, then you have your profit. Or sometimes instead of having a profit, you have a loss.
Ma'am, are you referring to some slides? Like,
No, oh, you do. Hold on, yeah. What am I supposed to do?
you
I
have
should
to
present now.
present, present now.
Okay, hold on, hold on. Sorry,
Yeah.
sorry, sorry. Suka hati je I lukis-lukis. Okay, can you see this now?
Yes. Yes.
Okay.
Saya dekat
But
dekat
I
dah
think
sebab
that you,
diam.
but I think that you can actually imagine what I'm saying. Can you?
Yes. Yes.
Okay, coming back, yeah. So we are going to look at, because we have actually three statements. So the first one is your balance sheet. So in the textbook, sometimes it uses balance sheet, sometimes it uses as a statement of financial position, SOFP here. Yeah, financial position means that you want to look at the position of your asset, your liabilities, and your owner's equity. So whenever you prepare your balance sheet, you must always have this formula, yeah? Your asset must equals to your liabilities plus owner's equity. What if it's not the same? What if your asset is more than your liability plus owner's equity?
It's not correct.
So it's wrong.
Mm.
So it's wrong. So you must double check, yeah? Check further. And the second statement is your income statement. So you have revenue and expenses. And the third statement, what is the third statement?
Balance sheet.
Balance sheet number one already.
Oh yes, income statement.
Statement of cash flow. Cash
Cash
flow.
flow. Yeah.
Cash
Cash
flow,
flow.
cash flow.
So sometimes we call it as statement of cash flow lah.
Yes.
Yeah.
Financing,
Of course, here
operating,
you're talking about your cash.
yeah,
Yeah. So your cash means that you're talking about inflows
and
and your outflows.
operating, financing, and investing. Right.
Yeah, I know you're from finance, so you must be very good in this.
I hope I remember.
Okay, so
But I
this
have
one.
that course. I'm taking accounting for IFIs.
Oh,
So
I see.
yeah, so
I
it's
don't know lah why this pen is doesn't want to work with me now. You see the pen?
yeah.
Hold on, yeah. Okay, this one you have later. You'll see that you're going to have operating. You have the financing. One more
Investing,
is
investing,
investing. I think it should be investing first. Yeah, invest
and then finance.
and then you finance. All right. So you want to look at how the company position, cash position with regard to the operating, how much you pay for the operation of the business. So we talk about operation is all together about the buying and selling and stuffing, all that is your operation. Talking about investment is how much actually the company purchase. All right, pay. For example, if you're talking about cash outflow, how much you pay. For example, you purchase an asset. All right, or if for example you're talking about inflows, maybe you dispose of your asset, how much you get from it. So all this is your investment. Finance is more on how much the investor put money
It's
into the
9
company.
o'clock.
Yeah, how much is the, for example, you take up a long-term loan, it could be under financing. Yeah, so this one, cash flow, we are going to look at later when you do chapter 13, 14. Yeah, it's towards the end. So in the meantime, all the while that we'll be doing, we are looking into the balance sheet and the income statement. So it means that, all right, your output is the statements, right? At the end of the day, you have to come up with the statements. How much is the asset liability and OE of the business, and how much is the profit and loss of the business? Is that clear? All right. So, okay, what else? Let's see. So then before you do that, you're right, you really have to understand that we're talking about the balance sheet, right? The financial position, it always report at a specific date. So we say that balance sheet as at 31st December. Yeah, because you just want to report as at on that date, 31st December, this is our position. Because on 1st January, our position may be different. You see? So that's why when talk about balance sheet, it's always as at 31st of December, for example. But if you're looking at the financial statement in the case of income statement and cash flow, is you are reporting, for example, statement of comprehensive income or income statement for the period or income statement for the year ended 31st of December 2020, for example. What do you mean by for the year ended? Means that you're reporting how much is your revenue and how much is your expenses accumulated for the whole year. That's why I say that for the year ended. All right. So it means that you are reporting total revenue and total expenses for the year. It's not that at any specific time, but for the whole year. Do you get me? Similarly, for the cash flow. If I say that the cash flow is for the year, then it means that this is the total cash outflow, total cash inflow for this operating expenses. For example, operating, yeah, cash flow from operating, financing, and investment. What else do we have? All right, cash flow, the movement, the changes of your cash. So that's why later you see that whenever you have the cash flow, I'll just show you here. When talking about cash flow, you're going to see that what is your cash at the beginning of the year. We call it as a cash in the beginning. All right, in the beginning. So normally when talk about a year period, so your beginning is always on 1st of January. So because we always assume that your company close accounts on 31st of December of each year. Yeah, so your beginning will always be 1st of January. But in Malaysia, we have many companies that have your year end not 31st of December. We can have your year end 30th of June. You can have your year end 31st of January. So in that case, your beginning, right, because you're looking at, let me show you here, right, the timeline. If your year end is 31st of December, it means that 1 year period must start on 1st of January. You get that? But if your year end is 30th of June, let's say that year end is 2020. When is the beginning of the business for 2020?
First June of
When is the beginning of your year end is 30th of June? So when does it start?
1st of July.
1st of July? Year?
Yes, 2019.
2019. So you have to be careful, all right, with regard to your period here. Because why? When talking about your income statement and cash flow, remember that you are actually reporting what actually happened during the year, right? You are actually reporting what happened during the year. So you must know which period you are referring to, right? If your year end is 30th of June, you only want to know all income or expenses that happened between 1st of July to 30th of June 2020. Do you get it?
Yes.
Because anything which is out of this period does not belong to that year of assessment. Oh no, in this case, it's not year assessment, year end. Right, so we have to be very good because we want the cut-off date. So only income and expenses during this period will be taken into account. Okay, so coming back to the cash flow just now, you will have cash flow. You will have cash flow in the beginning. Then you're going to have plus or minus. All right, cash during the year. So if your cash total from your cash flow here shows there's an increase in cash during the year, then you're going to add lah. All right, so it means that at the end of the day, you will have your cash in the end. All right, which is on 31st of December. So whatever you have cash here should be reflected in your bank. How much should be in your bank? All right. So because even if you make a profit, that amount of profit does not translate into your increase in cash. Agree? If you're making a profit that year of 10,000, does it mean that you have 10,000 ringgit in hand?
No.
Why is that?
10,000 profit could be, it could be like profit we have incurred, but it could be receivable, or we have already used the cash for another investment. Or
Yeah, because when talking about accounting, there are two concepts that we have to understand. All right, we have the cash accounting, and you also have the accrual accounting. All right, accrual. What is that? Accrual accounting. So cash accounting, it means that you're only going to record a transaction when there is a cash inflow or cash outflow. Yeah, but what we are using here is what we call accrual accounting.
Yes.
Right? So we are going to record revenue and your expenses. So revenue when it's earned,
And
right?
expenses when incurred.
And expenses when it is incurred. What do you mean by earned? We're talking about revenue. Okay? Revenue, when you're talking about a revenue earned, you're talking about, let's say, example in the textbook is about auto workshop, isn't it? Cik Wan? Example dia pasal apa eh? Let me see. Yeah, this one is a travel agency. All right, but if you look at the example later, travel juga. Okay, example here, right? Overnight auto service. Cik Wan, you must be very good about auto service. What do you understand by auto service? If a company is set up and is providing auto service, example of shop with auto service. Auto.
Workshop or spare part?
Yeah, kan? So it means that it's more on a workshop lah. Where actually the business is actually selling services or selling goods. Main business there.
Services.
They provide services.
Services.
Yeah, so they provide services. So when they provide services, how do you actually determine whether they have made revenue or not? All right, it's an auto service where I talk about workshop. All right, they provide services to motor vehicles. So how do you recognize that they actually have made revenue? We don't call it as a sales because sales is always related to products. In this case, they don't sell goods, but they provide services. So we are going to recognize these services when they have performed the service. Okay, when they perform the service, we say that they have earned their revenue. So when you say earn revenue, does it mean that you must receive cash at the same time? Not necessarily. Why? Some of their customer may not have enough cash. So what they do, they pay later. When we call say pay later means that they pay on credit. You get that? Pay on credit, it means that they don't pay now, they pay later. Maybe they're given 14 days, they are given 30 days to pay. But should you recognize the revenue now?
No.
Yes.
After
Why?
they
Because
receive the payment. After they receive the payment.
You want to recognize revenue when you receive your payment.
Yes, after they receive the payment.
Okay. It depends. If you're doing cash accounting, then you're going to recognize when you receive. But remember that our accounting here is based on accrual basis. So when it's accrual basis, it's based on revenue earned when you have performed your services or when you have made your sales. So in the case of the auto just now, when should you recognize the revenue? Cik Wan?
After they got the payment and then after they finish their work and or service.
Sadaf?
When the transaction is done, like
Transaction, what do you mean by transaction?
when they give the service
Then
and
remember
payment is
transaction, yes, service. So remember it's accrual, Cik Wan. Bukan cash basis tau. Accrual basis is based on when revenue is earned. It means that when the services is performed. So if the business provides services of what do you call repairs of motor vehicle, so when they perform the service, revenue is earned. Irrelevant whether cash is received or not. So you're going to record revenue when you perform services. Okay, so that's why I say that your profit and loss, it shows that your revenue and expenses. But if you are making a profit, doesn't mean that you do have cash of that much. Why? Because revenue, sometimes you have performed your services, but you have not received cash. Okay, so it means that revenue is there, but you don't have cash. Similarly, for expenses, you incur expenses, but you don't pay for it yet. All right, for example, you pay salary. Salary, normally you pay salary on the 25th of each month. That 25th salary paid, the salary paid on the 25th of each month is for services that you have performed or for services in the future month. For example, I take about, okay, we are coming, our salary is on, let's say, 25th of October. All right, the salary 25th October, Cik Wan, is it for the services you perform in October or that you're going to perform in November?
Perform in October.
In October, right? But the payment expenses has incurred from January and from October. 1st of October, you have performed the services, but you have incurred the expenses for the business. But have you paid? You have not paid. You only pay that on the 25th. You see that? So you at the point that employee provide services, you must recognize that as your expense. Right? It's not when you actually pay for the expenses, then only you want to recognize that as an expense. Right? So that's why how much is your profit may not be the same as how much is your cash in hand. Yeah? All right. So let's see for the example. Question?
no.
No, so far? Okay. Before we go into the example, okay. Starting statement of financial position. All right. So as I say, that is always have your asset, your liabilities, and your owner's equity. Yeah. Your asset here. Okay. You must remember whenever you look at the name of the accounts, you must already know whether is it an asset, liability, or owner's equity. All right. Whether you like it or not, if you have to remember it, you have to remember it. All right. So when I say it's cash, it's always an asset. When I say it's receivable, means that you're going to receive. Receivable means that you're going to receive that in the future. So anything that you're going to receive in the future is yours. So that's why it's an asset. Yeah. Supplies refers to anything in the business that you can use, right? In order for you to run the business, you need the supplies. Example, like in the education All right. In the business of education, supplies could be all the stationaries, right? All your printer, a printer is office equipment. Supplies, what else? All the stationaries, all those. It's an asset, but small assets, right? So we call it as a supply. So over the time, the value of the assets will be used, right? And then you have to buy some more, right? By talking about asset, fixed asset, for example, your office equipment is more expensive. So you're going to use this asset, your fixed asset, longer period. So talking about supply, normally within 1 year, you're going to use everything, then finish. But office equipment, normally you have a few years that you can use the asset. Yeah. For example, your office equipment, your what do you have in your what do you have in your business? Tell me. Sadaf, you have a business, right? Family
Yes,
business.
family
So
business.
what
Yeah.
do you think asset for the business?
Our assets is mainly our stock
Your stock, right? Your inventory is your asset. Other than that,
and our machinery.
yeah, machine is your asset.
Mhm.
Okay, and then
Building is
Um,
asset. Building.
building is your asset. Okay, how do we know it's asset or not? All right, you have to look at like this.
it has to be owned building, right? Like
Huh?
it can be rental bin. It will
Yeah,
rental
own.
building is not an asset, right?
Yeah. Mana the definition dia? I don't know what is. Okay, here. Asset are economic resources that are owned by the business and are expected to benefit future operations. Right?
Yes.
You must be the owner. You must own the asset. So if you're talking about building, if you own the building, then that is your asset. But if the building you use for your business is actually a rented property, that is not your asset. Okay, say one.
Transportation, like their lorries or car, whatever.
Again,
Is it
if
asset?
the motor vehicle is owned by the business, that's the asset. But sometimes you can also have a lease rental. Rather than you purchase the asset, you put that under lease. Right? You rental from other company to use the asset. I think that, for example, IIUM, all the motor vehicle is on the lease rental. We do not actually own this motor vehicle. I think so lah. Right?
Own the vehicle.
We
You
own. Is it?
yes,
Okay,
yes.
kalau we own, then it's an asset lah.
Our asset, yes.
Yeah, but if you actually you take that under a leasing agreement, so means that you're going to pay rental to the lessor. So in that case, the property or the motor vehicle is not your asset. Okay, land, for example, here is also your asset if what?
You have, you own the land, it's
If you
not
own the land.
rent. Yes, it's
You
not
own
rent.
the land.
The land.
But if the land is rented, then it does not belong to you. It
It's not
cannot
the
be under
asset.
your asset. Is that
Asset.
clear? So whenever you come across, cash is your asset. Notes receivable means that you're going to receive from your account receivable. Yeah. From your, in this case, when talk about receivable, normally from your debtors lah. From you punya customer. Yeah, receivable. Supplies is your asset. Office equipment, building land are also your asset. Clear? If you have to remember, you have to remember. So that whenever you come across this term, then you already know, oh, this one is asset. Right? Whenever you come out receivable, you know that it's an asset. Okay? All right. For an asset, all right, the principle is that asset must be on a dollar value. Right? You know how much you can measure the asset. You can value the asset in terms of monetary. All right. And then you say that it's using cost principle. So the value of the asset is based on how much is the historical cost. For example, if you purchase a motor vehicle, how much is the cost of the motor vehicle when you first purchase? Right? So the cost when you purchase is the value of your asset. Going concern assumption, it means that we are saying that how do we say going concern? Nanti I nak tengok dekat notes lah. Going concern, the how do I say going concern? The continuity of the business. Yeah. The going concern assumption said that in the absence of information, the business is assumed to continue operation into the foreseeable future. So it means that we are talking about, in order for you to recognize an asset in your company, we must always assume that the business will continue. All right. If the company is already in any problem, all right, which will affect its continuation of the operation, we are saying that the company is not in a going concern. Yeah, is going into liquidity, something like that. Yeah. Objectivity means that unbiased, okay, stable dollar. Okay. All right. Okay, what about liabilities? Liabilities is that, how do you see liabilities?
What
Okay, what?
we okay.
Whenever liabilities come into picture, what you have in mind? Is it a good thing or a bad thing? Ada banyak liability. I have many liabilities. Is it good or bad? Huh? I can't hear you. Bad, huh? Yeah. So because liabilities is something that you have to pay. Yeah. Is a future negative
Bad thing.
cash flow. It means that you have to pay. It's a cash outflow, right? You have to pay in the future. So if not now, you have to pay later. So liabilities is always a negative cash outflow. No. It's always a cash outflow in the future. So that's why the name of the, when you see that whenever you have liabilities, you always have the term payable. See, you have notes payable. Pay means that you have to pay. All right, payable. So you have to pay that in the future. Accounts payable is a liability. Salaries payable means that you have to pay salary in the future. You have accounts payable is your creditors actually, yeah. So whenever you see payable, you know that it's a liability. And then you have one, your honest equity. The name say honest. All right. We normally put that as OE, honest equity. So honest equity represent honest claim on the asset of the business. So what it means is that, all right, you have a business. When you want to set up a business, right, you must have a capital in the business. Have you heard of capital? Yeah. So you have to put money into the business. Remember, you have your asset minus liability plus owner equity. Okay. This is how it works. Right? So how it works is that you have owner. All right? Owner will put money into the business. Right? So this one is owners put money into the business. Then from here, whatever money that you have now, so this money owned by whom? Who owns the money?
The owner puts it into the business, so now it's the business's money.
Right? So this, all right, remember that this one is what we call separate entity. Okay? Whenever you talk about business, this business is separate entity from the owner. So once the owner put the money into the business, it's no longer is owner's money, but you have to differentiate between owner and the business itself. So now the money becomes the business money, but owned by the owner. How does it say that? Okay. So how is it reflected? This one is your OE. And this OE, you're going to buy asset in the business. All right. So when you want to buy asset in the business, you use the OE money. So hold on, I put it like this. Okay. When you want to buy asset in the business, how can you buy? Okay, let's say I want to buy a machine that cost me, let's say the cost of the machine is 100,000. The owner put money into the business 70,000. how can I buy a machine of 100,000 if I only have 70,000? I want to buy a machine, which is my asset. If I were to buy this, so the machine will be my asset. All right, so we call it this 100,000 machine.
Leasing?
You can do a leasing. So if a leasing, that means that it's a rental. All right. But let's make the normally when you want to buy, so leasing tak boleh jadi buy lah. Leasing is not buy. Leasing is rental. What if you want to buy a machine? How to put that 100,000 ringgit? How are you going to get the money? Sadaf?
Maybe we can do like payable in the future, or we get a loan.
Okay. So you take a loan, yeah?
Yeah.
How much you want to take loan?
50.
50,000.
Yes.
So where come another 100,000? 50, another 50,000. Where does it come from?
We already have 70, right?
Aha.
So we get 50 more. So we have 100 for the machine.
Mm-hmm.
Plus we have a little extra for the operating.
Okay, it doesn't work like that.
Oh, okay.
Can't do that, right? So if you have 50, means that the balance 50,000 must come from your own equity.
Mm-hmm.
Get it? So it means that from this 70,000 that you have, you're going to have minus 50,000 because this money you used to buy your asset. And at the same time, you also take up a liability, right? You take up loan from the bank. So whenever you take up loan means that you have to pay the bank. But rather than you pay 50,000 to the bank, you're going to pay bank into a small amount of installment. All right, maybe you pay, for example, 5,000 per month. So for so many months lah, in order for you to fulfill that 50,000.
Okay.
So if you can see here is that
Sorry.
now you have 50,000 from the OE, 50,000 from the bank. Yeah, you take up loan. So in order for you to have the machine of 100,000, you're using OE and then you have used your loan. Okay. So then you get your asset. So that's why at any time, all right, your honest equity will always be asset equals to OE plus your loan. Okay. Asset is actually financed by your honest equity and also financed by your liability. So the loan here goes for your liability. So whenever you have asset, that's why it goes back by asset equals to L plus OE. So in order for you to have asset of 100,000, you take up loan, a liability of 50,000, and you take up from your OE 50,000. You get that?
Yes.
Okay. Okay. So this is an example. Okay. What about retained earnings? Okay. Retained earnings is another concept. Okay. What happened here is that from your statement of comprehensive income, what do you call this? Income statement, isn't it?
Yes.
So what is under income statement?
Profit and loss.
Profit. Okay. Profit or loss. So how to derive to your profit or loss?
Revenue and expenses.
You have revenue
And expenses.
minus expenses. Okay. Let's say your revenue is 70,000. Your expenses is 30,000. Having a profit or loss?
Profit.
Profit of 40,000. Okay. So your profit of 40,000 here will go to your retained earnings. All right. So retained earnings is actually your revenue and expenses, but retained earning here is actually the 40,000 is your profit, right? It's what you earned, all right? Your earnings for the year. But the retained earnings here, all right, for example, this one is retained earning that you have. But remember, you have your shareholders, you have your owners that you should pay, yeah, dividend. Have you heard of this dividend?
Yes.
Okay. So initially, beginning of the year, you have, for that year, 2020, for example, you have a retained earning of 40,000. Di ujung-ujung ni tak nak pula. Okay. But you remember that you have to pay dividend to your shareholders. So let's assume that you pay 10,000 to your shareholders. So your dividend must always paid out of your retained earnings. Alright, it means that if company is having a profit, then only the company can pay out dividend. So for you to have to be a good investor, you want to have company that continuously pay dividend. Not only pay dividend, but pay a good amount of dividend. Certain percentage, at least 6%. Yeah. So in this case, initially you have retained earning of 40, but because you pay out dividend, then now retained earning goes until 30. So this 30 that goes into your SOFP. What is SOFP?
Statement of financial position.
In other words, is your balance
Balance sheet.
balance sheet. So the one that goes into your balance sheet is this 30 retained earning. It means that the company make a profit of 40, but because you pay 10,000 dividend, so the amount which is retained in the business, all right, is 30,000. That's why it's called retained earnings. And this retained earnings, all right, will be added together with your, just now, your share capital.
Mhm.
Right? What do you call that? Capital stock. Capital stock is the term they use in the US. In Malaysia, kita panggil apa? Share capital. Have you heard of that?
Share capital.
Share capital.
Share capital.
So because this book is a US textbook, that's why pakai capital stock. Even dia punya inventory pun pakai stock. Kita panggil inventory. Yeah. So retained earnings is what is retained in the business lah. So that will, the more RE that you have, it will increase your owner's equity. Okay. So if I were to put again, remember I said that, tukar color. Warna, okay tak? Try. Okay. Remember I said that asset equals to, okay, asset equals to liability plus owner's equity. This one is very important for you to understand because this is the only concept that we use throughout the semester. When you talk about accounting, it always goes back to this concept. Okay. Owner's equity, the dua kan? What is the two? You have share capital, remember? And the other one? Apa lah? What's the other one? Part of the OE?
Share capital and the owner. Sorry,
Shareholder.
Share capital.
and the owner's own funds, right? I think.
Okay, you see here. Owner's equity is made up of capital stock, which I call,
Retained earnings.
and retained earnings, right? Okay, Cik Wan?
Yeah, yeah.
Okay. How do you get your retained earnings?
Revenue minus
Yes. Revenue minus
expenditure.
expenses. So if it's a profit, all right, they increase your RE lah, and this one will increase your owner's equity. Right? So share capital plus RE, you get your owner's equity. RE actually from your revenue and your expenses. Okay, so remember this one, yeah, because I will come back to this later when you do your double entry. Okay. Okay, now goes back to the example here. You have owner's equity. All right, the accounting here, you have asset of 300,000. You can see that. And then liability is 80. Owner's equity is 220. How do you get 220? 150 plus 70,000. Okay, so that is 220. Am I too fast?
No.
Okay, Cik Wan, if I'm too fast, you let me know, okay?
Okay, okay, sure.
Okay. 9:30 sekarang. So because of that, now you have your asset equals to liability plus OE. That means that 300,000 is on the asset side and total liabilities and equity here is 300,000. So same lah. So you do have that accounting equation. 300 on this side, you also have 300,000 on the other side. That's what we call accounting equation. So if it's not, then something's wrong. Okay. So in this case, what do you understand by you having asset of 300,000 and then you have liability of 80 and owner's equity 220? What is the interpretation of this equation? What do you mean by having an asset of 300,000 represented by liability of 80,000, owner's equity of 220,000?
Okay, I'll tell.
Hmm?
I'll tell, ma'am. So it means, I think it means that the asset that we have has a value of 300,000 right now.
Yes.
That it is financed by 220,000 of the company's own capital, and 80,000 is what it owes to as part of a loan or something.
It's a
To
liability,
yes, it's a
right? So it means that from the asset that we own 300,000, the asset is financed by liability. 80,000 means that that financed by external lah.
yeah.
Liability is external. Owner's equity finance the asset by 220,000. Okay. So it means that on the asset of 300,000, liabilities who are the creditors can claim 80,000 on the asset. All right. And the balance is claimed by the owner's equity. Yeah. So what happens if the company suddenly goes into liquidation, goes into bankrupt, for example? And if the company goes into liquidation, means that they are closing their shop, all right? Assuming that the company has an asset of 300,000, creditors will claim first
Make a steam generator
80,000 from the asset.
to just
Yeah. Creditors will be given the priority to claim 80,000 from the asset, and the balance will be claimed by the owner's equity. Hmm? Right. Okay, let's look into the transaction for before we go into this, any question? No, yeah? Okay. I rasa macam I've been talking for so long. But it's only 70 minutes. Betul ke ni? I don't believe it. Maybe. Okay. So this is the example. Okay. What we are going to look at, the example afterwards, is that it's a business of overnight auto service. So means that the company provides services. Yeah. So whenever the company provides services, then there will be a revenue. Okay. But remember that before you can start a business, okay, when you want to start a business, Cik Wan nak buka company apa?
Traveling.
Oh, okay, traveling, right? You must have your own business. When talk about business, it could be an enterprise. Sole proprietorship means that you are the only owner. Sole proprietorship. Or you want to come up with a company, all right? In this case, most likely it's a sendirian berhad. Yeah. Or it could be a partnership. Right? So let's assume that it's a company. The difference between sole proprietorship enterprise and the company is that sole proprietor, you are the only owner. But company, you're going to open the company, you can have other people to put money into the company, and those who put money into the company is known as shareholders.
Shareholder.
Yeah, okay. So you have a travel agency now, Travel Sendian Berhad. So you need money now. So who are going to put the money into the company? The shareholders. So shareholder put money into the company. So whatever money put into the company, remember separate entity, now the money belongs to the company. Of course, it's owned by the shareholders. Yeah. So whenever you put money, then you get a shareholding. Right? Put money, then you get shareholding in the business. So that's why namanya shareholders. Right? So in this example, mana? Okay, on January 20th, in this case, is an enterprise. Michael McBrien started overnight auto service. He and his family invested 80,000 ringgit and received 8,000 shares of stock at 10 ringgit per share or $10 per share. So what happened here is that you put money into the business, right? And remember that this one is a sole proprietorship because he's the only one that put money into the business. So how much you put? 80,000.
2,000.
So when you put 80,000 and you receive shares of the company. So in Malaysia, whenever you buy shares in the company, you will receive the share certificate.
Shares.
Yeah. And the shares here, you say that the price of the shares is $10 per share. So $10 per share times by 8,000 units of shares, you get 80,000.
80,000.
Yeah. So you have 8,000 shares, but put into monetary value, it becomes 80,000. Because why? Each shares is $10 per share. Yeah. So,
$10 per share.
so what happened is that now you have to imagine. Remember, you have to identify the business activity or the economic activities. What happened now? Owner put money into the business. How much? 80,000.
80,000.
So what the business get? The business get cash
Cash.
of 80,000, isn't it?
Yeah.
So cash, remember, cash is an asset. So whenever in this case you have to identify, oh, now we have an economic activity whereby owner put money 80,000 into the business. Whenever you have that, then you now have asset plus liability plus owner's equity, right? But in this case, right? So in this case, if you were to write A equals to L plus OE, in that example, right? This one is for the example, yeah? You have 80,000 cash, which is an asset. Do you have any liability? No. Zero liability. Zero liability, but how much is your OE? 80,000. Right? So in this case, is your asset equals to liability plus OE? Yes lah. You have 80 equals to 80. Isn't it? So here 80 equals to 80. So means that the equation is there. You do have the accounting equation. So whenever there's a business transaction, all right, when you identify, then you must always have this. What is the implication of having that? What is the implication of each business activity? Do you get me? So that's why you have to understand what is asset, liability, and owner's equity. So that's what we are going to do now. For every transaction, I want you to identify what is the economic activities that take place and what will be the implication on your accounting equation. You get it? Okay. Now you have asset of 80,000. So total asset is 80. Then you have capital stock of 80. Clear? Okay. Then what happened is that on January 21st, overnight purchased the land from the city for 52,000 cash. What happened?
Cash, cash money.
Cash money, what happened to cash?
Less.
Reduced by
Re-
52,000 because you use the money. Initially, your cash is 80,000, right?
Yeah.
But now you use the cash to pay out for the land. Okay. So what happened actually? Anything happened other than that? Tak ada kan? So now you see that, right? For the second one, it's always like this, you know. You punya asset initially is now, okay, tadi 80-80 kan? 80-80.
Yeah.
Okay, now what happened? Cash initially 80, but then you have to pay for
Land. 52.
land. How much is the land?
52,000.
Okay, so cash now, initially you have 80 cash, but now you have 52. So how much is the balance?
28.
28. But do you have any other asset that you have now created? What you pay 52 for?
we got the land.
Land.
have
Is
land,
land your
yeah.
asset? Is land your asset?
Asset, yes, asset.
Why is it asset?
Owned by the company.
Owned by the company. So now you have a land of 52.
Yes.
So now you have land of 52. How much is here? Add together 82. So you have
80.
80 again. Anything happen to your
80
liability and
again,
owner
yes.
equity? Do you take any liability? No. Do you pay anything out
No.
of your owner's equity? No. So in this case, how much is your LE, OE dekat ni? 80 juga. Nampak?
Yes.
So in this
80,
case,
80,000.
the changes is only on your asset side. There's a change, but the totality of the asset still 80. But you see that your cash now reduced to 28, but you have increased your asset by 52 in the form of land. But total still 80 and your L plus OE is still 80,000. Clear? So that's why every transaction you must have the accounting equation. Yeah, there's no change on the L plus OE, but there's a changes in the asset. Sadaf, okay?
Yes, ma'am.
It's too easy for you.
It's okay. Alhamdulillah. It's
But you did this long time ago, right?
yeah.
But does it still make sense?
All the thing easy for Sadaf, doctor.
Too easy, ah?
Right, Sadaf, easy for you, right?
I
Not for,
actually
not for me, easy for you.
no, because I studied it even in my high school and then in undergrad, so that's why it's a bit easy. Alhamdulillah.
So you want to quit class early?
No, it's
But
okay.
it's okay. It's a revision because
Yeah.
you really need a very good foundation on this. Because
Yeah.
everything now goes back to here. Okay, for the
After that, she can teach me, doctor.
that's good. That's good. Make use of her. Okay. Now we have 22nd. Okay, overnight purchase an old garage for 36,000. Right? You purchase. So when you say you purchase means that you are going to own that lah. Overnight paid 6,000 down in cash and issued a 90-day note payable for the remaining 30,000 owed. Okay, Cik Wan, what do you understand? What is the economic activity here?
Oh, so that means they pay first, and then after that, after some period, they pay back. They pay the balance amount 30,000.
Okay.
Not
So,
payable. So that means like they have some agreement after some period.
okay, you pay that.
The company pay the amount.
Okay, and on 22nd of January, how are you going to record this? You pay later 30,000 now. But what happened on the 22nd of January? How much you pay?
30,000. In the writing 30,000 in the writing 30,000 till 30,000, and then they have agreement to pay after
90 day.
maybe after
So
90
what are you
days.
going to record on January 22nd? What would be your accounting equation? Okay. Okay, this
Yeah,
garage.
okay, still a asset.
Sorry?
22nd.
Ni lah, tarikh ni on this date.
Okay.
How are you going to
So
record?
the garage amount 30,000. The garage amount 30,000.
36, okay.
30 or 30,000?
Cakap baik.
Okay, 36, and then they already pay 6,000. If okay, one night already paid 6,000, and then balance after 90 days.
So balance ni you panggil
About
apa?
30,000
What is this 30,000?
liability.
Liability. Yes, that's correct.
Or
That's correct. This 30,000 is actually your liability. And because you kata ada note payable, so you namakan liability ni as your note payable. Kenapa ada note? Sebab memang ada notes lah. When say note payable means that there's a note that you sign between the buyer and the seller saying that, okay, within 90
Is it
days,
like
I will pay
agreement
the
also?
balance. It's a kind of simple agreement.
Like agreement?
Yeah, it's a not payable.
Okay.
So what happened here is that if I were to put that, I put it like this, right? Your cash, how much is your cash balance
28.
from the
Yes.
previous transaction? You only have 28, right? Betul?
28. Yes.
28.
Yeah, betul.
But
28.
now how much you pay? You pay cash 6,000. Then how much
6,000.
is the balance?
6,000. And then balance 20,
28 minus 6 is 22.
22,000.
Okay. Do you have any additional asset? You still have land of 52, no change, right? But
We
now
have
you
a
have
land
new
50,000.
asset that you call that as a garage. So garage is part of the building. Boleh? Kalau you tak garage pun, I still take it.
Yeah.
But the building, how much is the value of the building? 36. Right? You can ambil the
36,000.
value tau, total dia. Right? On the other side, okay, how much is your liability and owner's equity? Okay.
30,000.
As at this date, all right, you zero OE and a zero liability. OE is 80, right? Right. But now
80.
you have liability increased by 30. You see that? Why 30? This one is your not payable. Initially zero liability, but now you have a not payable of 30,000. Plus owner's equity of 80. So total dari berapa? 110.
80.
This side how much?
100.
0,
110.
1,
110.
110 juga. Betul? 110.
110. Same. 110. Yep.
So if we were to see here, is 110. So can you see the difference now? Cash, alright, decreases daripada 28 jadi 22. Land, no change. But the building increased by 36. There's a movement in the asset that give value of 110, and there's also movement in your liabilities plus OE, whereby there is an increase of liability of 30,000. So from every transaction, you must understand what is actually happening. Yeah, you don't forget this now, even though in the transaction does not involve this, right? But it's still there, right? You still own the land, so it's still there as your asset. It's just that there's no movement. But the building now, there's an increase in the building, but there's a reduction in your cash. But because even though there's an increase and decrease in asset, but it gives you 110, the other side also give you 110. Next is you purchase tools. Again, tools and automotive repair. Again, here you have 13,800, and then you have due within 60 days. Yeah. So what happened is that in this case, dia tak cakap not payable. They call it as an accounts payable. See the difference? So if you were to do again, all right, then you have to understand lah. All right, you have cash initially 22, now that's not 22 minus, because you pay by cash. Your cash now is 22 minus how much you pay? You don't pay anything.
18.
So there's no change in your cash. But you have a land, you still have your building, and now you have tools and equipment, isn't it? How much is the tools and equipment? 13,800.
30,800.
Okay, but you also increase your liability by initially you have 30, right? So you have 30 plus 13.8. No change in your owner's
13.
equity. So you can see here there's no change here, but there's an increase of 13.8. Sini pun ada increase 13.8. So it should be balanced lah. Nampak? So here you have increase in cash, increase in asset in the form of tools and equipment, but you also have increase in liability in the form of accounts payable. Okay.
Okay, tu.
So far so good? Okay.
InsyaAllah.
Next is your, another one is that overnight realized that the company had purchased more tools and equipment pula. Alright. Then dia kata now they sold some of the new tools to Ace Towing for 1,008, price equal to cost, agreed to pay within 45 days. Okay. So what is happening here? Sadaf. Not around?
Sadar nak
Okay, you
around.
jawab.
He went to somewhere. Okay. 1,800, he got the
Ha.
they got the account receivable,
Why?
1,800. Because they sorry. Okay, this so some of the new tools to Ace Towing for 1,800, and then they got the money after 45 days.
Okay. So what happened to the tools and equipment? Initially,
So
how much you have tools and equipment?
so after 12,000,
Initially, so
the
before this transaction, how much your tools and equipment?
13,800.
Yes, very good.
Before this, so
Then when you sold, means that,
1,800.
so if you were to see it like this now, you punya tools and equipment tu kat atas ni kan, 13,800, now reduce, tolak, how much you saya? 1,800.
1,800.
So now 280 tinggal 12,000.
Yes.
Ha, that's how you get the 12,000. So tools and equipment
Yes.
now 12,000. But at the same time, you ada accounts receivable sekarang ni. Why receivable? Kenapa dia asset? Why you put
Because he
account
got the money
asset?
after because after 45 days he got the payment,
You're going to receive the
and then
payment.
cash money, receive cash money after 45 days.
So you're going to receive the money, that's why namanya receivable. So kat sini ada account receivable additional of 1,800. Any changes in liability and non-owner's equity? No change.
No change.
Sebab why? Yang ni kita sell. So bila kita sell, kita akan create accounts receivable lah. So clear tak?
InsyaAllah.
Kena clear betul-betul ni. Nanti ada bagi soalan.
Alamak.
No, you kena nampak dia punya the movement tu. You kena understand what is actually happening. Contohnya kalau I were to put in my own words lah. What happened is that the company dispose of tools and equipment for 1,800. So tools equipment bila you dispose, tools tu akan turun lah. Isn't it? Dia akan decrease by 1,800, but the payment will be in the future. So payment in the future means that you're going to receive in the future 1,800. So you're going to receive means that it's also an asset lah. So now you have reduced your tools and equipment from 13,800 to 12,000, but you're going to increase your account receivable by 1,800. So because dia ada naik dengan turun value yang sama, so dia net off lah. Nampak tak? Sebab dia, yang ni dia turun 1,008, dia naik pun 1,008. So dia set off lah.
Same amount.
So there's no change in the value, total value of the asset. 1,238 juga. Kalau tengok sebelum ni pun 1,238.8. Walaupun dia sama value, total value of the asset, but the asset tak sama. Nampak tak? Kat sini, you ada tools equipment 13,800. Kat sini, you ada tools equipment 12,000 only, but you have account receivable of 1,008. So it's different types of account. Cumanya dia fall under the same category. Right? Kini kenapa kosong? Okay. So and then, so bila you revise balik, you kena tengok balik transaction ni, what does it mean? Right? Contohnya macam in this case, Ace Towing pays overnight 600 as a partial settlement. So what you understand by this? What is the economic transaction kat sini? Overnight pays RM600 for the tools and equipment.
It's 10 o'clock.
They pay for macam mana?
Okay, sekarang ni company receive or pay?
They receive money from the stowing.
So which account will be affected?
Asset.
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 Which asset?
They got the cash.
Cash.
Then,
Okay.
yes.
So cash increase lah.
Increase
By how much?
600.
600, yes. So cash increase by 600 lagi. Account receivable.
Accounts receivable
Initially
reduce
how much?
1,200.
1,800. Now jadi
1,200.
no, I mean
1,200.
initially
Before this,
was
1,100.
1,800, but now the company pays 600. Account receivable pay out kan? Ni nampak? Stowing is the account receivable. Okay? They pays overnight
Receivable,
600
yes.
as a partial settlement. So initially hutang dia 1,008, now dah turun jadi 1,200. So what happened here, if I were to draw again,
200.
alright, cash, how much is the initial cash?
600. Oh, sorry.
22,000 kan?
22,000.
So cash is 22,000,
Yes.
campur 600. But accounts receivable, initially it was 1,800, but now reduced by 600. So nampak tak dia knock off ni lah,
600.
kan? But the value here jadi 22,600 and here jadi 1,200. Right, so means that total asset will still be the same. It's just that the amount of each asset now changes. Increase in cash, reduce in accounts receivable. Kan?
Receivable, yeah.
Alright, and then another partial payment of account payable. So in this case, you pay accounts payable. So what happened?
The cash
Okay.
reduce.
By 6,800 kan?
And then,
And then account payable increase or decrease?
yes, 6,800.
Ha. Account payable
Yes.
increase or decrease?
Compare.
Bila you bayar accounts payable,
Account payable
decrease lah.
decrease.
So
Decrease. Yes. So 7,000. Decrease 6,800 and then the balance 7,000.
how much is the initial accounts payable? 13,800. Nampak kat sini? Before the transaction. So what happened now is that your cash tadi ada berapa? Cash initially ada 22,600. Now you pay. Bila you pay, minus lah cash. Okay. 6,800.
Decrease.
But your accounts payable ingat belah sini. Account payable.
Account payable also
Initially it was 13,800 kan? Minus
Yes.
6,800. Nampak? So sini turun.
So balance 7,000.
Dia kalau side macam ni, you tengok macam ni. Sini turun 6,800. Abang. Weng. Sini turun 6,800, sini pun 6,800. So maknanya equation still the same. Ya,
Yes.
cuma value akan turun. Ya. So initially sebelum ni 1,123 kan? Sekarang ni dah tinggal 1,17, but cash dah tak ada, tapi at the same time account payable also reduced by what? Account payable reduced to 7,000. Mana dapat 7,000?
Balance from the 30,800.
Yeah, this one lah. Ni 13,800 minus 6,800 tinggal 7. So the one that you report is the balance tau. Yeah? Okay, yang ni. Okay, this one is how you report. Okay, this one is how you report revenue. Okay. Ingat tak cerita pasal revenue tadi? Mana revenue? Revenue. Sini. Revenue is part of owner's equity. Okay. Logiknya, whenever you have revenue, does it increase your owner's what is revenue? Do you like revenue or you like expenses?
Revenue.
Why?
Revenue like profit, right?
We put that revenue as plus. Expenses is something that you have to pay. So it's negative.
Yes.
Betul? Boleh?
Yes.
So whenever you have revenue, you actually increase your retained earnings. Bila you increase your retained earnings, your OE pun increase. Nampak tak?
Yes.
Okay. Whenever you have revenue, you will increase your retained earnings. Right? You increase your retained earning, you also increase your owner's equity. But expenses is a negative because you have to pay for the expenses. This one is you increase your profit. Expenses reduce your profit. So whenever you have expenses, it will reduce your RE. This also reduce your owner's
OE.
equity. Make sense? Okay. So when you have a transaction that increase, that you have a revenue. So this one overnight recorded auto repair services. Remember? Dia provide services. So bila provide services is revenue. Okay. So what happened is that how much you provided for the last week, receive cash of 2,200. So if you look at the transaction, of course in this case,
Cash increase.
pandai sekarang. Cash, whatever cash that you have, we have increased by 2,000.
Cash 2,000.
100. Tapi on the other side, owner equity
200.
also increased by 2,200. Kenapa owner's equity increase? Why?
Equity.
Huh? Why OE increased by 2,200?
Retaining revenue.
Because it's a revenue, right? Because it's in the form of revenue, that's why the plus OE. Boleh? So that's why you see here, you ada retained earning kat sini of plus 2,200. Cash pun tambah by 2,200. Okay tak ni? Whenever you have revenue, so in this case, in case cash. So bila cash received, cash increase lah by 2,200. At the same time, revenue increase your owner's equity in the form of retained earnings. Kenapa retained earnings? Because revenue is part of retained earnings. You always go back to here. Yeah, revenue is retained earnings, part of retained earnings plus. Okay. The next example, apa buat? You paid operating expenses. Agak-agak apa berlaku? What happened to your cash?
Decrease.
Decrease because you have to pay 1,400.
Yes.
So cash minus 1,400. But owner's equity, retained earnings. Tadi ada berapa retained earnings? 2,200, right?
2,200. Yes.
What happened tadi kat sini?
Also decrease.
So sekarang ni dia akan tolak 800. 800 because dia expenses. Sini campur 800 cash. Betul tak? So retained earning. Salah. Kenapa salah? Apa yang salah?
1,400.
1,400
minus 800.
Yes. Minus berapa?
1,400. Balance 800.
Yes, betul. So kat sini dia akan minus 1,400. So bila you tengok initially it was 2,002 minus 1,400, that's why you tinggal 800 OE. Betul?
Yep.
But kat sini you tambah 1,400 cash.
Tambah.
So that's why you punya it becomes like this. Yang ni minus lah ni.
Yang cash bukan minus juga tu. Cash.
Oh, sorry.
Tolak 1,400.
Minus. Thank you. Very good. Because you pay. So minus 1,000.
Yes. Pay minus.
Okay. So the next page tell about the movement of all the accounts lah. Okay, the movement. Campur tolak. For example, cash ni buatlah plus minus for every transaction tu. That affect cash, dia akan buat macam ni. But I do not expect you to do this lah. Kita tak buat benda ni. Accounting equation ni kita tak buat. Tapi I tunjuk you macam dalam ni tadi. I hope that you get the idea. Do you think that this one is beneficial? Do you get this? Okay tak? Okay, and then okay. And you also want to show that, all right, the cash account ni that will appear in your cash flow statement. Yeah, so I don't want to show that later. You see that from this movement juga, you can see that you punya income statement. Remember income statement? Yang all this while you buat apa? Ini nama dia apa? Balance sheet.
Balance sheet.
Asset, liability and owner's equity. But if I want you to draw me an income statement. Income statement tunjuk apa? What is under income statement?
SOCI.
Revenue and expenses. How much is revenue that you have? Ingat tak? Initially your revenue was 2,200. Kan? Lepas tu you pay for expenses of 1,400. So if you want to show me your income statement, you akan ada sales revenue 2,200, expenses in the form of wages and utility 1,400. So you have a net income of 800. So this 800 ni appears also in your balance sheet. Yeah? Alright. Okay tak?
Okay.
Dah penat dah ni. Apa ni? Sikit lagi.
Mata dah kecil dah.
Mata dah kecil, I pun dah tak larat nak cakap ni. Okay, cash flow, I don't want to do it now. Okay, cash flow. I will do cash flow later. So this is your final balance sheet. Okay, and then relationship, I mentioned about this. Okay. This is one I mentioned lah tadi. You nak buka sole proprietorship ke, nak buka partnership or nak buka corporations. So sole proprietorship means that there's only one owner. He's the only one that contribute money to the company. Right? Okay. End of chapter 2. So hari ni I plan nak buat 4 chapter. I can only manage 2 chapters. Okay. Sada, when you want to do the quiz?
Yes, ma'am.
When you want to do the quiz?
The one on Google Classroom? I can do it tonight.
Okay.
Yes.
You only have 20 minutes now.
Oh, right now?
No, I mean, when you start doing, you do with that within 20 minutes only.
Okay.
All right. So I think that's all for today. Please review your text, your chapter 1 and chapter 2. And I will give questions maybe before following class. So our next class is next week lah.
Yes.
Isn't it? So maybe I will give you another tutorial so that you can practice this one lah. Okay? So with that,
This class you record, right? This class you record, right? Our class tonight. Record, right?
yes, I record.
And then you
Nanti I will put this in my YouTube channel.
Oh.
Nanti I bagi link for the YouTube. Sebab kalau I simpan, dia kata now Gmeet, I stop recording lah ya. Because Gmeet now, Gmeet is it? Stop recording.
I thought you download Google